In the cold, blue dawn of Wall Street, power walks fast and secrets walk faster. On this brisk morning, the most trusted name in finance is already beginning to crack. Long before the headlines, a young broker built his empire from a cramped 1960s office, ledger by ledger, trade by trade, laying the quiet foundation for what would become legend. He rose to chair the mighty NASDAQ, a symbol of modern markets and electronic ambition. Respect followed him like a tailored suit. In polished conference rooms overlooking Midtown, clients leaned in as he promised consistency, stability, certainty in an uncertain world, and they believed him. At glittering charity galas, fortunes clinked in crystal glasses. Access to him felt exclusive, almost sacred. To invest with him was to belong. While trading floors screamed in chaos, his advisory office whispered calm, a private island of steady returns in a sea of volatility. Or so it seemed. Behind the screen, the cursor hovered over numbers that had never seen a real trade. Profits appeared with a click, no market required. In a cramped back office, a handful of loyal clerks kept the illusion alive. Manual ledgers, off-system records, secrets stacked in filing cabinets. A rubber stamp slammed down, approved. Ink turned fiction into financial gospel. Legitimacy manufactured in a single decisive press. Across boutique feeder funds, envelopes and wire instructions flowed down quiet corridors. Money traveled confidently toward a black box no one questioned. In living rooms across America, glossy statements slid from printers, embossed in gold. Parents smiled. College funds seemed secure. Futures felt certain. Marble bank lobbies hummed with routine deposits and polite signatures. Ordinary transactions feeding an extraordinary deception. By lamplight, wealthy clients admired their steady gains, unaware the numbers in their hands were as fragile as the paper they were printed on. In private offices, sealed envelopes and signed checks changed hands. Quiet rituals of trust repeated again and again. Newspapers praised his stability. Television anchors cited his remarkable consistency. Reputation became armor, and armor became blindness. But one analyst refused to be dazzled. In a cluttered office, Harry Markopolos stared at the data and saw the impossible hiding in plain sight. Memo after memo left his desk, carefully annotated, meticulously argued, warnings dispatched to regulators who would barely look. Inside the halls of the U.S. Securities and Exchange Commission, doors closed, files stacked, and urgency dissolved into bureaucracy. An empty office, unread memos, missed chances. The silence of oversight can be louder than any alarm. Then 2008 arrived. Markets convulsed. Screens bled red. The financial system trembled under the weight of its own excess. Phones rang relentlessly. Withdrawal requests surged. Confidence evaporated in synchronized panic. On December 11, 2008, in a dim home study, the confession came. It's all one big lie. Two sons sat frozen as their father's empire collapsed in a whisper. A trembling hand dialed authorities. Loyalty gave way to duty. The call that would detonate Wall Street was placed from a quiet living room. Federal agents stepped through the doorway at dusk. The illusion ended not with applause, but with a warrant. Files overturned, servers cataloged, a dropped tie on the floor. The anatomy of deception laid bare under fluorescent light. Page by page, investigators traced the fraud. Fabricated trades, circular cash flows, decades of invented performance. Weeks turned to months, court dates mounted, the unraveling gathered momentum, each page torn from the calendar revealing deeper rot. On a glowing monitor, impossible returns stared back at stunned investigators. The math wasn't brilliant, it was imaginary. In court, the number hit like a hammer, $65 billion, wealth that existed only on paper, dominating the room like a silent verdict. Boardrooms once filled with optimism, now sat abandoned. Charities and foundations faced a future rewritten in red ink.
Online accounts flickered to zero. Life savings vanished in a sterile digital instant. On courthouse steps, cameras crowded as the architect of illusion faced public disgrace. The spectacle was swift and merciless. The gavel fell. 150 years, a sentence designed to echo longer than the crime itself. On television screens, associates were indicted, reputations shattered, even family was pulled into the undertow. Longtime employees signed guilty pleas, admitting their roles in sustaining the machine that never truly invested a dollar. Funerals followed, grief layered atop financial ruin. The human cost rippled far beyond balance sheets. Headlines chronicled further tragedy. 2 sons dead within years, one by suicide, one by illness, collateral damage of a father's deception. Court-appointed trustee Irving Picard moved with relentless purpose, pursuing banks and feeder funds that had profited from the scheme. Press conferences announced lawsuits and clawbacks. Justice would not restore trust, but it would seek restitution. Slowly, billions were recovered. Over $13 billion returned to victims. Unprecedented, yet never enough to erase the damage. The SEC faced humiliation and reform. New policies stacked on old failures, lessons written in the margins of oversight. In university lecture halls, the case became curriculum, a cautionary tale about blind trust and unchecked authority. Behind prison bars, Bernard Madoff spent his final years in federal custody, the empire reduced to a solitary silhouette. Across transit stations and news feeds, words like fraud and betrayal flashed beside his name. The scandal seeped into public memory. An ecosystem revealed: feeder funds, pliant accountants, complacent regulators, a network that allowed deception to thrive. In suburban kitchens, investors recalibrated their futures, wary now of promises dressed as certainty. At golden hour, Wall Street stands quieter, shadows stretching long across stone facades, a reminder that trust, once broken, leaves scars. And in the end, the blank ledger turns, a final page with nothing written, except the warning that the simplest lie, repeated often enough, can become a monster. If you want more true stories where power, money, and deception collide, hit subscribe now.